What's up, everyone? Welcome to Let's Talk Markets. I'm your host, Dave Lauer, and this is our monthly markets episode where we actually talk markets on Let's Talk Markets. Thrilled to welcome back our regular guests, Dennis Dick and Eric Smolinski. Thanks, guys, for being here.
Thanks for having us.
What's up?
It's been a fun start to the year. It's been an adventure. There's some volatility back in markets. We're seeing even today. So as we record this on Tuesday, March 5th, we're seeing a little drop at the in the afternoon. But markets are, it's been pretty crazy. A pretty crazy bull run to start the year, I think. So what are you guys thinking? What are you looking at here? What's jumping out to you?
I mean, rotation. I'm looking at a lot of rotation. That's been what has been happening the entire year, except the money's been rotating out of most other things and into tech. And today we're seeing the opposite, where you kind of got a little tech wreck going on. And the beneficiaries of that is the value trade. The banks are trading higher. The oil stocks are trading higher. You've got consumer staples, obviously risk off, trading higher there. IWM in itself, which has participated but not to the degree, is outperforming the Qs. Qs are down 2.1%, IWM only down 0.9%, but it is down. A little bit of that to do is SMCI is big in there too, which keeps skewing that index to a certain extent until the rebalance. But rotation. Eric, what are you looking at?
I honestly think you hit most of the general theme. I think volatility has been interesting to me here. So right now, VIX is at 1465. It's been like really muted. It's even more muted now than I think it should be, given the kind of moves that we're seeing today. And I was actually looking at some structural analysis on that in terms of money flow into index ETFs versus short-term volatility products that might be attributing to that, which I do find interesting. But like, today, we're at least seeing some normalization. Volatility's up, like 6.5%. So that's good compared to the E-minis being down over 1%. But yeah, volatility has been behaving strange to me. Still a lot of opportunities, still a lot of very cheap volatility, which again, from a derivatives perspective is good. And then I also think we'll probably talk a little bit about bonds and rates maybe a little bit later, but I think keeping an eyeball on those is in play here, especially monitoring the relationships, at least from, again, a trading perspective. I've found that to be at least of note. And then we have a couple other things coming up pretty soon that I think are very tradable events. So one of the things that comes to mind, SMCI going into the S&P 500, those kinds of additions tend to be very tradable events. There's an observable market pricing in, post, ad, stuff like that for me, at least.
I saw an interesting analysis on that the other day that actually presented the bear case for the SMCI index edition, because it's such a massive part of the current index. It's in Russell 2000, right? So it's a huge piece of IWM.
Yeah.
And so new money from retirement accounts that automatically gets put into those index funds has to buy a pretty large amount of SMCI relative to it going into the S&P 500, where it's going to be a much smaller component. Was talking about how maybe we're not going to see the normal bump that you would for an index edition like that.
Well, I mean, we saw the bump Friday night, and when it got announced, it was funny. I actually traded this on Friday night. Got announced. We all knew it was coming 5:15. We didn't know the stocks, but there was a lot of speculation it was going to be SMCI. Some people were speculating Palantir. There was also talk of Workday, which is why Workday got hit really hard Monday, because it didn't go in. Other ones they were talking were Elf Beauty. So there's a few names, and some of those actually are showing weakness. Everything's showing weakness today, but they were showing weakness just because they didn't get included. The SMCI had the big pop on that announcement from 920 up to, what did we get up to? 1155. It almost felt like an overshoot. It was such an extreme pop. You wonder if that, isn't the topping event for this. Mm-hmm. I mean, I obviously, we don't know where SMCI is going. Maybe if the AI continues to grow from a fundamental perspective, maybe there is still room for growth there. But let's give a perspective. I mean, the stock has went from $300 to $1,037 here now. It's been a pretty good run. Sometimes you actually see on those inclusion announcements that is actually the topping event. So what do you see? Like, you think, Eric, you get another bump here on the actual day it moves in?
Yep, that's exactly what I would expect. It's one of those things that it's, again, data in aggregate. So for SMCI in particular, do I have a general dog in that one fight? No, I don't. But what I do know is that from a data perspective, the vast majority have positive drift the after being added. So all I do is if it gets added, trade it. And then some of them will win, some of them will lose. In aggregate, it wins. That's what I go for.
How do you play it? With options? Usually always with options?
Yeah. Typically, I find it to be just, it depends. Like, I do think equities is fine, but for something like this, especially because if you look at the average move post ad, it's not that high. It's something around like 2 to 3%, depending on what window you're looking at. So in order to amplify the move, more often than not, I'll use deep in the money and then what I call kicker options, something that are a little further out of the money. But it's a pretty short duration trade. And moreover than that, the leverage, it caps the downside if you get the opposite move. The other thing is that I do view it as a asymmetric risk profile style trade, whereas historically after being added, the move after being added to the downside is very skewed to the positive integers. So it means that at least from a broad data perspective, if we add something, it has a higher probability to move up a little bit and it has a low probability of moving down. Can move down, always can move wherever, but options give a pretty effective play for the thesis, at least from my perspective.
Yeah, I used
Premiums
to
in there
trade
got to be
the rebalancing days.
Yeah.
And that became a really crowded trade really fast. And then you ended up getting the opposite effects because it was so crowded. But I think that's and it's an interesting approach you're talking about, Eric, of trading it well ahead of the rebalancing day.
Those Russell rebalances, Dave, and I got some stories there back in the day too, because we traded all algorithmically as well at Bright Trading. And I can remember it was like a slam dunk in the early 2000s. You long all the ads, you short all the deletes, they pop up, end of the day, and then you sell them all on the close, and then you actually try to go short them on the close because they almost always retrace some of that move afterwards.
Yep.
Where we saw in like 2000, and I'm dating myself very badly here, but like 2007, 2008, it started actually, we had some moments like before the financial crisis where the trade went the exact opposite way. The ads it was so crowded. Everybody was long the ads, short the deletes, and on the day of, they all went the other way. And I've seen a lot of traders get hurt. I've been hurt, with it going the other way as well. So they can get crowded. It's a fantastic point. In some cases, obviously they do go in the direction that's expected. But when they get, so many people on the one side expecting that move, it can go the other way.
Definitely. And it's one of those things, again, that you have to, I don't know, I always finding persistent themes of either inefficiencies, mispricings, anomalies, and then testing the robustness over it. Because the other thing that, rings true as I hear you talking about that is something like post-earnings announcement drift. If you look at large cap post-earnings announcement drift, the criteria for that to occur has gotten way more strict because the trade definitely got overcrowded. That's one of the benefits of adding leverage, at least, is that I find, at least still, but as long as it remains to be the case, in aggregate, you still get a move. So if I can add a little bit of leverage to take the move, I will. But to your point, I've actually seen that pretty massively. The other thing I find really interesting is that the equity movement in the month before being added is pretty massive. It's a multiple of the post ad range. So volatility behaves very differently pre and post ad, which I find that very interesting. It gives me some, I don't want to go too tinfoil hat, gives me some ideas that maybe the information might be coming out to some people, maybe a little bit early, and it's starting to spur kind of some early movement. But yeah, I think the other interesting thing with stuff like this is even if we look at SMCI now, the implied volatility percentile on that is 98%. Massive. Wow. So you can even just trade volatility in that. And I think that would be a pretty efficacious trade.
Well, it's been a crazy, from a vol perspective, it's just been part of the craziness, right? Like this AI trade, which has just been absolutely remarkable. I mean, where you guys see that, I think everyone has been transfixed by NVIDIA and SMCI and AMD, and it's starting to bleed Microsoft, it's starting to bleed Meta, it's starting to bleed over into other names. So look, I'm a big believer in tech, and I think AI is transformational. I'm also, as someone who's been in markets for a while and seen bubbles, I think markets tend to get way ahead of themselves on, what actual earnings are going to be in the intermediate term. Where are you positioned? What are you looking at when you're looking at AI and tech right now?
I mean,
I'm kind of
we've been talking about it on pre-market prep for a while. Sorry, Eric, I didn't know who was directing it to, so I jumped in on the hesitation. We steal on pre-market prep. We steal all the time, so there's a second hesitation. I just grab it. But we've been talking about, and we created an acronym actually for it, David. NASA. We've been talking about NVIDIA, AMD, SMCI, and you can throw on AVGO or ARM. You pick which one you want for the NASA, but we've been talking about this since January, and I tweeted every once in a while NASA rocket ship, because these 4 stocks, 5 stocks really, it's the AI trade. ARM's probably the better one to throw.
I got to jump in here real quick, Dennis, because you as a Canadian, you're saying NASA. Most people will say NASA, but it's okay.
Is it that? Is it like the Arnold commercial from the Super Bowl?
And that's all. It's adorable. Okay, sorry.
Is it like the Arnold commercial from the Super Bowl? Did you see that commercial? It was Arnold Schwarzenegger, and he was doing for Allstate or one of the insurance company, and he couldn't say at the end. There you go. So
I was waiting for the stock that had a U in it, based on what you were saying. I thought for sure there was a U stock.
My wife says it the same way, so it's all right.
NASA. NASA. That's what I'm saying. NASA. It's like on the paper. He says NASA. Yeah, but I mean, these stocks have, at a certain point in time, though, it's, not saying, and again, I'm long, full disclosure, I'm long NVIDIA, I'm long AMD. I sold my SMCI. Never was long the ARM or the AVGO. I wish I was. But it's just, for the most part, SMCI has just run too far for me now. But I think there's still a story here. I mean, even on this day, NVIDIA, which has been the one that they say is going to crash the market because it's the most bubblicious of them all, here's a day where every tech stock is getting killed. Mm-hmm. And NVIDIA is down 0.1%. It's not even down today. AMD is down 1%. It had some bad news this morning too, with their AI chips over, getting blocked from selling in China. I mean, even on this day where they seem to be selling everything in tech, and just for your listeners, Apple's down $5, Microsoft's down 12 points. I mean, there's 3, 4, 5% down moves across the board. So, if you think the big NVIDIA is crashing, you'd think it'd be down 5, 6, 7%. It's trying to go green here. I mean, this is unbelievable relative strength. Everybody keeps trying to call a top on this thing, and there just hasn't been one here. I've argued that I think it could go to $1,000. I don't know if it's going straight there, if it's going to have some hiccups along the way. It's obviously been an incredible move, but, a throwback to Eric here. What are your thoughts here on this AI trade in NVIDIA and the resilience of this trade, even on a day like this?
I think the coolest thing about it is that it continues to remind people that our thesis doesn't matter. Like, what we think really doesn't matter. The market is going to move, and the market's going to price things as it prices things. And NVIDIA has been a persistent story of that, because much like you, I'm long NVIDIA. And the way I look at something like that is, until it starts to show weakness, I can't believe it's this high. I just keep watching it going up. Who the hell's buying?
In the same place.
Yeah. Awesome.
But I tell you, right, exactly. As long as they're buying, I'm here for it.
Yeah.
But I do try to conceptualize the flow of money, and I do have an underlying suspicion that something like AI, if it's done within the scope and capacity that I believe it can be done, I mean, I think it's the next biggest revolution since internet. I think has the potential to change just about everything.
Yep.
So with something like that, trying to price that in is supremely difficult. So when I see it up here, I obviously think it's tenuous seeing something make the move that it has, but it's not something like GameStop during the squeeze, where if we didn't know there was a squeeze going on, nobody would look at that and be like, yeah, this makes sense. It's obviously a structural driven move in that previous example, but in NVIDIA, you can look at that and say, if AI has the capacity to make the impacts that some of us think it does, and obviously most of the market does, at least as of now, you can see the value. It's
Yeah, if you
just,
look at Nvidia, right, trading at around a 70 PE today, and you compare it to like AMD, you can't even compare them. Like AMD, we're showing a 390 P to E.
And on a forward multiple, those are a little bit more attractive because if you go and grab the
better,
forward,
yeah. Nvidia may
multiple,
be
'cause-
far more reasonable with forward-looking PE, but AMD is just like outlandish.
AMD is about 55, I believe, on the forward.
Is it? Okay.
So it's
That's
not quite as crazy. Yeah, it's 61. So 387 on the current because they had some pretty bad quarters in there. But if you're projecting out on what they're going to make this year, it's 61 now. And when I bought it, and I made this argument on the forward basis, it was 29 times earnings. And when I bought it, I bought it back at $95. And I was making the argument on our show that there's value here. And this AI is for real, and AMD is likely to be a major competitor to NVIDIA in the future. That multiple has expanded significantly. And I've sold half of my stock, full disclosure, just because I feel like a lot of that is valued into your point, Dave, that we've had a pretty good multiple expansion here happen. The stock has doubled, on a lot of multiple expansion. But if you look at market caps here and you compare NVIDIA, it becomes interesting because the market cap on AMD is only $330 billion. Yeah. And they don't have hardly any of that AI pie yet. So if they get a bigger piece of that pie, maybe, we're under projecting what those earnings potential are for AMD, where NVIDIA being a $2 trillion mammoth, it's hard to grow when you're already the biggest one. You think of like, here I can give Eric a weightlifting. He likes to lift weights reference. Remember Pumping Iron, the movie Pumping Iron with Arnold Schwarzenegger? Fantastic movie. And Arnold says, in the movie, he's talking about, climbing the hill, and they're arguing, well, it's always easier when, it's always more, when the person's trying to climb the hill as opposed to the person who's on the hill and on the top. So AMD and Lisa Su is likely hungry, to try to get that piece of the pie. And I wouldn't bet against Lisa Su, which is why I think I'll probably continue to hold at least a piece of AMD, even though the valuation seems stretched. Think about what she has done to turn AMD around. We were like, oh, it can't be worth more than Intel. We've left Intel in the dust. Now we're coming at NVIDIA. So I just think if they can get a piece of that AI pie, maybe those earnings projections are too low.
Yeah.
Well, and I think you guys bring up another point that I'm actually curious what your perspective is on, because I've done a lot of analysis as of late out of sheer curiosity, especially with how disruptive tech has been, which is tech valuations, I think we all know, behave differently than kind of standard valuations, right? So as you guys are talking about forward earnings, tech has always been in its own little universe. But when you look at something like AMD from either of your perspectives, like what would be an absurd valuation where you guys are just like, this does not make sense? Because clearly we're not quite there.
Because as we're talking, I was running these numbers. So like, on 2026 earnings estimates, I see AMD at 40 PE, NVIDIA at 35, and Intel at 15, which is a far more sane ratio. That said, is Intel really like out of the AI arms race? I have trouble believing that, right?
Intel's trying to reinvent themselves, get away from this, PC. They're trying to find their way. And, Intel may find their way. And to your point, the valuation is a lot lighter in a stock like Intel because they're trying to find their way. And the market is skeptical. So, like I was in Intel for a long time, for a decade, I owned shares of Intel. It had done well, and then, it just didn't do anything. I think if we look now at the charts here, even on Intel, really in the last 5-7 years now, we've gone nowhere here. In that same time frame, AMD has went from $13 a share to $200. In that same time frame, NVIDIA has went from $40 to $840. So, I mean, it's now it's Intel's a prove me story, and they're going to have to prove to the market that they can, get back into this race here. And until they start to prove that, and even to the point we should talk about Apple eventually too. Apple's getting to a point where they're going to become a prove me story pretty soon here too, because it's down and getting hit significantly, not participating at all in the recent tech rally. So there's separation happening, not only within sectors, but within tech as well.
Yeah, I posted a chart on Irvin today looking at Apple versus NVIDIA, Microsoft, Meta, and Google. And what you see is it's a 1-year chart. You see Apple getting pretty close to unchanged on the past year. And you headed towards unchanged, clearly. Google turning, and Microsoft, up over 50% over the past year, and nice steady. But then of course, NVIDIA and Meta just rocking. And yeah, I think you're starting to see some real divergence in tech. And it's like, you were talking about rotation, Dennis, but last year, right, was a year of highly concentrated returns in just a couple of names. And now we're seeing even more so in tech. And when when I look at a 40 forward PE on AMD, it still seems so frothy to me. Like I don't see them having any room for error on something like that. Whereas, some of these other names from a value perspective are starting to look more appealing, unless you're assuming that, they're just going to be left in the dust.
And that's kind of the question that I have is, with that kind of valuation and the sustained performance, like, when do you change your thesis on that? Like, when does it become AI is potentially providing that kind of value, that a 40 PE might be logical?
And maybe it's light. Maybe if Lisa Su can figure it out and start eating some of NVIDIA's lunch, maybe that forward PE isn't 40. Maybe it's more like 30 or 25, and all of a sudden you're like, oh my gosh, we're playing a market multiple for AMD. If we look out to 2026 or 2027. I've always been a value type of guy. I've always been growth at a reasonable price more than anything, probably more Garb type of guy in my investing portfolio. And, just trying to look out to those projections, not getting mesmerized by the current PE, because that, I learned from Amazon that, back, through the, 2004, 2005, 2006, 125 PE, this is going to crash. And they just set it for a decade, yet they were growing that top line, and eventually the bottom line caught up as well. So I know when you've got a good growth story here, it's shocking how much, the multiple expansion isn't always as much as you think it is. But, there's a fantastic point here. I mean, at a certain point in time, is all the good news priced in? That's the ultimate question.
Yeah, personally, like, I actually started buying some ASML, which is, sort of that semiconductor infrastructure provider. I mean, yeah, they're trading at a pretty juicy 34 forward PE, but it's the PE today is 45. So it's not like it's off the charts for the current earnings, right? So like the earnings are there, and they're the ones selling the pickaxes and the jeans and such. So, it feels a little more to me like a little less risky versus an AMD who has to execute and fend off, these massive gorillas in the room, right?
I guess it depends on how you consider fending off the massive gorillas, because at least from my perspective, the room is a damn big room. And I think most of the gorillas have a place to sit down. So maybe they have something to climb on and take care of themselves.
Well, if that's the case, maybe Intel is the best buy in all of this if they can get their shit together.
If they can get out of their own way, yeah. Like sometimes when you see like really well developed companies like that have really carved out their niche and they're slow to change, like it can be difficult for them. I still believe in them. Like I think it's a good company. I think they have the potential, but it does not surprise me at all to see them moving slower than all hell in this.
I mean, even on
my
this
experience
day,
comes from like a decade ago, right? A little more, actually, 15 years ago, when I was in HFT and AMD was eating their lunch for a while, right? And every new server we were throwing in was AMD, and slowly but very surely Intel just came in and finally like totally eclipsed them. And then at that point, it was like a switch flipped, and we went all Intel for a long time. So maybe that's not going to happen this time, but I've seen it a couple times now where AMD is like the sprinter. They get ahead of Intel temporarily, but there's like, the tortoise is just coming and coming and coming every single time.
I think it's a solid analogy.
I think it's Lisa Su though too. Just a different, company since Lisa Su took over too. I mean, I don't know what the stock price was when she took over, but I think it was probably single digits. I mean, so sometimes it's just like, Steve Jobs, like it's just certain people who just can envision things that, others can't. I think she's one of those. I think she's very underrated for what she's done. And that's why, I wouldn't bet against her. Like if Lisa Sue's like, I'm going to retire, like I'm out, or I want to do something new, that would be worrisome for me. But as long as she's behind the AMD, I feel like she's going to be 2 steps ahead of Intel.
Okay.
Interesting.
All right. So what else? Outside of at least semiconductors, what's caught your eye over the last couple of
Dave,
months?
You already know what I have to ask you. You already know.
Inflation?
Is there going to be a recession? Yeah. This has been a question I've asked you for a year now, and I intend to see it through to the end.
I think that what we're looking at right now, I think worst case scenario right now.
Ooh, I love this.
Just from an inflationary perspective, is this sort of sticky 3% inflation. I guess I shouldn't say worst case, but most likely. Like there's always the black swan or the impact of something geopolitical we cannot foresee. But absent that, let's say, inflation stays sticky. The Fed does not cut much, but they're going to cut. And if you look, if core PCE can come in at like 2.8%, it's already a 2 handle, right? It's not dropping like they probably want to see it, but they're at a 2 handle. They know interest rates are a little high. I think there's no way we don't get 2 cuts this year.
Aren't they still planning 4?
Yeah, I think the dot plots are like 3 to 4, something like that. The market.
I thought that was
pricing in.
I thought that was really interesting to see 4, especially with them potentially starting as late as June.
Right. Right. That's why I don't think. I think if they're going to start June, it's going to be like in every other meeting kind of thing. So I really don't think it's going to be 4, but maybe. But honestly, like if the Fed comes in and they're cutting, they're ahead of the slowdown. If they start cutting in June, we hope. The labor market has just been incredible. The inflation numbers are better than I think most people thought, even with what's going on in the Red Sea, which could have been that sort of, impact that could have changed things. So I don't know. I still think we're looking at a soft landing, and I still don't think the Fed, especially in an election year, is gonna mess this one up. I don't know what's going to happen next year. It might be that we're living on borrowed time. But I don't think I don't know. They could pull it off. It's crazy, right?
I was in the recession camp a year and a half ago, because it was like, there's no way we can continue to jack rates up here and not have a recession. But it hasn't happened. So at a certain point in time, you've got to get off that train and just say, look, we already raised the rates. People are resilient. We underestimated how many people were locked up in their mortgages. We underestimated, and there's been pockets of, obviously big ticket items, aren't selling as well. Cars, struggled. We got obviously EVs struggling tremendously because financing those cars at these higher rates is just not as easy. But the consumer has been unbelievably resilient. Yeah. Where I probably made the mistake was underestimating the YOLO coming out of COVID, where people will not save for a rainy day. They will borrow more to continue to live right now, because that rainy day may, never come. So that's what's, the mentality of the consumer has permanently changed since COVID, I believe. And that is probably what has driven, the expansion more than anything. So people will not stop spending until they are physically not lent more money. And if we're going to start lowering rates, well, that's not going to do anything to curtail spending. So, I mean, we're at a point here now where if you're cheering for a recession, and you're short stocks, you're in the pain trade here. It doesn't mean the market can't correct. Doesn't mean we're going straight up. Right. But I just think even if, just envision a scenario where all of a sudden, we do look like, we're going to fall off a cliff. Look at all the ammo the Fed has. I mean, they could just do an emergency cut and rescue the markets, rescue the consumer just like that too. I mean, so many bullets in the chamber here now, as in future interest rate cuts. It's hard to come and say, the end of the world's coming here. Unless Xi invades Taiwan, I think it's hard to really find that scenario where where the markets are going to crash.
Yeah, and he's not going to do that. I mean, I don't think he's going to do that this year. I think the U.S. election year is what is going to keep everything sort of held where it is. I think that let's face it, like, she probably doesn't want Trump in office, right? Like, I mean, I don't know if he really wants Biden either, but like, I think he's cognizant of what's going on. I'll tell you, like, I've heard, when I talk to people that really know their shit, they don't seem to think he's even ready until 2027 to do anything militarily. Those are people whose opinions are well steeped in sort of the national security apparatus and such. So, in my mind, that's like, if anything's going to happen, it's not going to, of that magnitude, it's not going to be until then. And then I think, like, Dennis, that's such a good point, right? Because when we were in ZERP and QE, a lot of people were looking at it and they're like, they got nothing left, right?
Yeah.
Like, they bet, one, this better be all they need to do. And two, how the hell are they going to come out of this in order to reclaim those tools and that ammo in case they need it again in the next part of the cycle? Which is why no one ever thought we'd be debating whether we're coming into whether there's going to be a recession after this interest rate hike and the ending of QE. So, again, I've said it many times, but the fact that we're even debating it is mind blowing. And now they have their tools back. They have their ammo. And yeah, I don't think they're going to let anything happen in an election year. And I think if you look at like Dow theory, right, it bears all that out, from the historical perspective.
So it just comes, do we just continue to buy the dip? I mean, we got a nice dip here today. Do we say, markets are likely eventually moving higher here again? And do we buy the dip? Eric, how do you approach it?
Oh, I feel like as long as there's a rate cut on the horizon, my positioning will be the same. It'll be long small caps, long bonds, maybe short large caps sometimes, not right now in general, but long volatility, which is ipso facto kind of short large caps. But yeah, I mean, again, from like I always like to get your guys' perspective on that, because the fascinating question, especially when we look at how the rate environment has moved around, it's been just such a cool story to follow, at least from my perspective, because I started trading in 2007, but I was very young then. And I haven't seen anything quite like I'm not sure any of us have seen anything quite like what we just saw. So it's just a fascinating exercise. But again, I keep my world kind of relegated from interests to business, which is trading. And from a trading perspective, as long as there's a rate cut on the horizon, I would bet dollars to donuts, smalls go up, bonds go up, post cut, trade that. That's the idea.
Right.
I said on the show, I think the TLT has bottomed. I think we've seen the low in the TLT. So obviously that makes me bullish bonds. I just don't see inflation unless we see, all of a sudden inflation data starts to just rise here like crazy again and they lose it. I don't see that happening.
No.
So I think at this point, bonds might be a really good bet that you're betting on, Eric. Like, I mean, there's a lot of, obviously you can chase, the NVIDIAs, you can chase that stuff, but maybe there's going to be a catch-up trade here. Maybe once they start actually lowering rates, we don't have to hide in all this tech stuff that works in any environment. We can start looking at, those small cap stocks, which are trading at depressed valuations. I mean, IWM's been under, like, what are we trading, 14, 15 times there? You want cheap. There's a lot of cheap stocks. So you don't have to just go buy the IWM and, obviously, pick. You can pick and choose to as well. You're allowed to. So because a lot of those companies don't make money, but there's a lot of companies that do. Lots of companies paying 12, 13, 14 times earnings, which, it would benefit tremendously from an interest rate cut. So, I mean, at what point in time do we start looking at those interest rate cuts? They didn't come in March, but, May, June, they're coming. So maybe it is time to maybe reposition ourselves to a certain extent, sell some of these mega cap tech winners, and maybe buy some of this value stuff that's been depressed because of higher rates.
Yeah, I think I'm on board with that kind of approach right now. I think there's a lot of, and surprisingly, there's actually a lot of cash out there, right? A lot of people went into these juicy money markets, got scared, thought something was coming, didn't. Now they're missing out. They're rushing back in, right? I think there's a lot of cash out there to come into some of these value plays. I mean, that's what I'm looking for personally.
when you were saying about the money market accounts, I smiled because it reminded me of seeing everybody enamored by I bonds. And I just remember sitting there thinking, when everybody's flooding into these as if they had found like the holy grail of investments. And I was just like, do you guys know how these work? Anybody? Do you guys know how this goes? And I've just been following I bonds, and it's been the funniest thing ever. Just,
I have a framed I bond.
I love that.
From when I was born. Here, let me tell you a little story. My great grandmother, amazing woman, did not have money. Grew up in Northeast Philly. You would have seen where she grew up because that's where they filmed Rocky. Some of the early on the streets of Philly scenes, and she just put like a little away every month of my life into the I bond. Right, you can imagine this little old lady putting this right, and it was worth good money, right? In the 80s and the 90s, that was like a reasonable thing to do. And there weren't many, instruments for someone like that to save money for someone else. But yeah, I'm with you. I think that time has passed, and I thought it was pretty funny that people were suddenly discovering them. But I think that's not where I'd be putting money, especially, like if you want short-term return, there's plenty of options right now that'll give you 5% or, in a very safe way, right?
Definitely. And yeah, I think the funniest part about that is people are running into it in kind of like the false pretense that they just think that they got this great rate that's going to be there for, an extended duration, which it was.
Right. That's right.
Dennis is coming up on time.
I've got
time for you.
Yeah. So
it's getting that 3:30 witching hour here, which means I got to go trade the close. So thank you so much for having me, and I always enjoy talking with you, Eric, as well. And we're going to get you on pre-market prep here sometime too. Cool. We're going to get you over there as well, and we'll talk some stocks there too. But Dave's always been on the show lots of times here. So thanks so much for having me today.
Sure thing, Dennis. Thanks for being here. Eric, you too. Thanks everyone for joining us on Let's Talk Markets. We'll try and do this again next month. We'll have our macro episode coming up in a couple of weeks, and we're going to try and get another episode in here to talk a bit about some things going on with We the Investors and the SEC, as well as the Reddit IPO. I'm actually headed down to DC for Thursday. I'll be on a panel at the SEC's Investor Advisory Committee talking about equity market structure proposals. So hopefully you can live stream it. It'll be on the SEC website. Again, if you like what we're doing here, give us a rating, hit that subscribe button, and we'll talk to you next week. Thanks everyone for joining, and thanks guys.
Thanks so much.